I'm Ashton Addison from EventChain.io for the Crypto Coin Show. Today on Blockchain Interviews, we have Reginald Ringgold, the founder of BlockVest ICO.io. Welcome to the show, Reginald.
Hey, glad to be here, Ashton.
Yes, thank you for being here, and I would love to hear a little bit to start about BlockVest.
Yes, well, BlockVest is the use of blockchain technology and digital identity to digitize assets. So if you understand blockchain technology is a distributed ledger technology. So we envision utilizing this distributed ledger technology to use a distributed network to create pretty much a smart economy that operates on this distributed ledger technology. We believe firmly that in the next 5 years, every single asset and the 1.2 quadrillion globally in derivatives will be put into a smart contract and become a digital asset. And we plan on being able to be there to take advantage of that transition.
That's great. Yeah, the derivatives market alone is trillions and trillions of dollars right now, and I too believe that will soon be tokenized on the blockchain. So could you speak a little further about the products that you have at BlockVest?
Yeah. Some of the main products that we're offering, obviously, your traditional, cryptocurrency pairs, but we're taking it a lot further. Obviously, there are certain products in the market right now that, or aspects of the market right now that aren't addressed, such as being able to trade on the short side. For instance, short sellers in the crypto market, it's very rare that you have short sellers trading on the short side because we don't have many prime brokers or brokers in general that are willing to allow us to be able to come in and borrow, the crypto and short it. Also, there's leverage issues. So one thing that we plan on doing is, we're offering a model very similar to the Chicago Mercantile Exchange or even BitMEX, where you're going to be able to come in and trade, these cryptocurrency pairs with futures and options capabilities. We're also taking it a step further and offering OTC derivatives. OTC derivatives are your traditional, financial products such as, indexes or indices like the S&P 500, the NASDAQ 100, Dow Jones 30, or even commodities like gold and oil, or even currencies that are pretty much being able to be put, on a smart contract and open source on a blockchain, self-managed with the smart contract. And the biggest thing, Ashton, here is we're settling it in cryptocurrency instead of fiat. If you understand the way that cryptocurrency works, the model that Binance uses, or even BitMEX or Kraken, is they'll have several different wallets on the exchange where you house these digital assets. And the beautiful thing about that is it's segregated, which means that if I get a margin call per se on one particular coin or token, it's not going to affect my holdings on my Ethereum or in my Ripple wallet or Bitcoin Cash for that matter. And the reason this is very important is, if I'm trading with an exchange or a broker, a lot of times they're denominating my account in one currency. And if I get a margin call per se, because let's say I get slipped and I have my margin falls below the requirement to be able to hold the position, what's going to happen is they're going to start closing and liquidating my other positions, and they'll take money out of my account, or even sometimes my house or my assets can be on the line. What we're doing is we're a peer-to-peer broker, just matching contracts. It's our job here to just be able to put bids with offers, and in that we understand Bitcoin, crypto, it's decentralized. It's a peer-to-peer network. Right now, there are a lot of different, coins out there that, because they use blockchain technology, they call themselves, crypto or decentralized, when it's not necessarily the case. Some of them are actually e-money because they're, in fact, centralized on a closed private blockchain that, isn't really open source. So we really plan on coming in and changing a lot of the things with these derivative products. In order to be able to do so, you do need licenses in the United States, which we've done a good job to have a culture of compliance and regulatory oversight by obtaining these licenses. And our goal is to use some of this liquidity, which we don't really need from the ICO or the IPO, but our goal is to use some of the liquidity to be able to not only go public, on a New York Stock Exchange or a NASDAQ, but also per the NFA and the CFTC, they've got a capitalization, a minimum cap requirement of 20 million to be able to operate as a futures commission merchant or a retail foreign exchange dealer. And, Ashton, if I'm a crypto broker, I want to be able to offer also, Forex products and settle in fiat and vice versa. If I'm a Forex broker, you'll see that Forex brokers right now, they offer Bitcoin and Ethereum, but they'll settle in fiat. It's just a CFP. So we're offering both, the crypto pairs that can be settled in crypto and later on down the road fiat, but also your traditional things like your Forex currency pairs that you'll be able to trade in fiat or crypto. So this is going to be revolutionary for the space as a whole.
Wow, that's super exciting. And I think that as you mentioned, having traditional Forex pairs and is almost like a gateway for traditional investors to get involved, yes, but not have to use crypto on the first day, but they can see how those markets are running alongside their markets that they're used to working with.
Correct. I mean, you hit it right on the head. I mean, think of it like this. Imagine if I was coming in and I'm from, China or even the UK, where they're pretty prevalent in trading foreign exchange or Forex. If I'm coming over here to the United States and, I want to trade with an Interactive Brokers is going to give me the option to settle in what I want in terms of, a fiat national currency. I want to settle in US dollars, I can settle in US dollars. If I want to settle in euro or pound, it's my choice. So that means that my account's going to be denominated in what I choose. Funny thing is, I can put whatever currency I initially want. I can put US dollars in and then choose to not denominate it in CAD, Canadian dollar. So what we're doing is we're saying, hey, you choose. We just know that these assets are moving to a space where they're digital. They're becoming digital, which is, something that these big banks and institutions can't really do anything about. Now they're trying to integrate this into their current business models and address interoperability issues.
That's very interesting. It looks like you guys have really set a unique position for BlockVest in the exchange niche here. So we'll see how that, how you move forward with that. I'm very excited to see how that flourishes. And I also read that BlockVest is doing a couple other unique things I haven't seen anywhere else, like these invest nodes and master nodes. Could you speak a little bit about what that is for these traditional investors and also how they have the potential to make money with that?
Yeah. So, invest nodes, they're very similar to, if you're familiar with annuity, for instance. An annuity, some annuities will, give you an initial premium when you invest in it, and they'll go in and be able to offer the ability to generate passive income. And at the end of term, so to speak, you're able to receive your money back, pretty much the initial principal plus, the money that you've made. So, one of the things that we've noticed with a lot of the different crypto investors is they hodl the coins. They're holding them. A lot of times they could be holding them on a centralized exchange platform like a Binance or an OK Exchange, or they're holding them in their cold wallet. So we understand that a lot of these crypto investors, just like any traditional investor, they would like to generate, income with the cryptocurrency. And we understand that, with crypto, there are ways where you can go about leasing your crypto or operating in a system where, it creates passive income. Obviously, when we say lease, one example where people are leasing their crypto right now is with platforms like Salt or even BitMEX. BitMEX allows you to lend your crypto to people that want to short, and you pay like 1% daily as far as prime rate. We're going to have a very similar model, except a lot of the liquidity comes from us, our market making capabilities. But with the invest node, it generates passive income through an asset-backed profit-sharing smart contract. Now, at its core, Ashton, the BLV is a security token that's representative of the top-performing cryptocurrencies, and they're weighted in market cap. So if you understand this, it's again built on a profit-sharing smart contract, and we're producing a model which is a token as a fund, which allows the investors to subscribe to our income stream. And then they're able to monitor, our different holdings. But the beautiful thing is, if you're familiar with the Dash masternode structure, they have, or the architecture, they've got masternodes, which uses a POS, a proof of stake architecture or algorithm, very similar to Bitcoin and Bitcoin's mining, so to speak. But the proof of work obviously is not as efficient or as effective as the proof of stake. So what proof of stake is a bonded validator system, which allows me to come in and use the BlockVest token, which initially is collateralized by the top 30 crypto that we're buying, which will pretty much give the net asset value of the exchange and the fund itself. But those BlockVest tokens are then put into the invest node, which is very similar to like an escrow account. If you're familiar with platforms like Bancor or platforms like local Bitcoins, where they put your crypto in escrow. Same thing with the QT wallet when you're staking your coins. You're familiar, Ashton, right?
Yes.
So with this model, you put it into our invest node. When you put it in the invest node, we then give you a 20% consideration, which is our yield stable coin. Now, that yield stable coin is then now exchanged immediately for Ethereum at a 1-to-1 par value. Now, what this does is, much like an annuity, you're now putting it into the invest node and given immediately 20% consideration, which kind of softens the blow initially. It takes the risk down initially. Now, what happens is, much like the US dollar and the US monetary system based on the gold standard, the yield is sold to the BlockVest Foundation, and then the yield is now used as a stable currency on our platform that you can buy from us to be able to utilize the ecosystem and pay the fees. Now, how we stabilize yield is the collateralization pool or liquidity pool. The collateralization ratio in the liquidity pool is an 80% collateralization ratio. Now, if you're familiar with the gold standard, they used a 33% collateralization ratio. And they were using gold assets, which were very hard to track as far as custodial. We saw that as well with Tether. They had custodial issues, and that's why they fell like a feather. So what we plan on doing is using cryptographic assets. Cryptographic assets are crypto. They're digital in nature. They have no physical form, so they're the best thing to use for collateral. With our collateralization pool, we're able to adjust the fees for processing the transactions, for which there's a revenue sharing ecosystem. And in that, we share half the fees to process the transactions on the BlockVest DEX platform. To take it a step further, if, let's say, the yield stablecoin happens to go up too high above $1, we de-incentivize the active invest nodes by dropping the amount that they get for being able to process the transactions, which then takes some of the active invest nodes and has them close out some of their invest nodes. Then stabilizing the yield back to $1. And in reverse, if we see that this stability happens to fall below $1, we're able to come in and kick the fees up for processing the transactions. And this exchange generates a demand for more invest nodes that are active on the system. The beautiful thing is we're able to do this with what the Forex market uses, which is no fees, Ashton, on our trades, but a spread, baby. We're able to take and mark up the ask price or mark down the bid price, and we take the difference in between there. And we share that with the different traders or active invest nodes that are helping to secure the platform and process transactions.
That's great. That's a very well-rounded answer, because I was going to ask you about cryptocurrency volatility, as that's a major thing when we're in trading. But as you looped back to the stable coin, that's actually, makes sense, because it's something that people are, when they move from traditional finance to crypto, they say, well, US dollar was sort of my peg, but now where's my peg? So you're really exposed to a lot more volatility. So to add a stable coin in there seems like, the perfect solution.
You hit it on the head. And I saw this initially, my background's finance, and coming from, traditional markets and crypto, I was very aware of what, Nixon did when he took us off the gold standard in '71, and how, the money being fiat creates quantitative easing, a excess of supply, which dilutes, our buying power. And we know that, crypto changes this because obviously we have a max supply and, a smart contract that's immutable. But the biggest thing that we see that's a fundamental change, as you said it, the custodial and volatility. If you understand the thing that makes or made tether great and makes the U.S. dollar or any fiat currency great is in the Forex markets, which is about 3.5 trillion that's traded per day. They're that huge and have that much liquidity, which is a lot bigger than futures and the equities market. It dwarfs them. They're that large because of price stability, Ashton. Traders know that the price is going to be stable. That means that 1 unit of account is 1 unit of account. Now, obviously, we're affected by the price ratios being adjusted on the things that we buy at the point of sale counter and other things of that nature. But for the most part, if we have a currency that is stable, we then need to address it being collateralized by something, because if it's not collateralized, there's nothing to be able to have you come in and to be able to stabilize it, or even cap the supply and keep government or any specific governing body to be able to stay honest and keep from diluting it.
It's very, very true. So I'd love to know a little bit, a brief roadmap of what you guys have coming up for BlockVest in the next 6 months, and, how the viewers can get involved and get onto BlockVest.
Yeah, Obviously, we were currently in our pre-IPO right now, and Ashton, it's very key that they understand IPO. We're in the testing the waters phase. The ICO market accounts for 1% of the traditional equity raise markets or the debt markets. Obviously, 1% of what the IPO market does is literally nothing, but it's a new market, it's innovative, and the media and journalists, they're able to feed off of it and have, something to write about. But if you understand that, the biggest thing is there's really not much new with an offering if it's regulated. And if you're able to go through the different hoops to be able to get Reg A approval from the SEC to where you're an actual accredited offering, it changes a lot of things. It changes the game. With us as a closed-in family office, as long as we've got a market cap of 30 million, and we're very transparent as how we report things to the regulators, we're able to go public on a national listed exchange rather than a Binance. We don't want to get listed on Binance. We don't want to get listed on a Kraken or a Coinbase. Obviously, we'll only be exclusive on our exchange, as well as being able to list on these national listed exchanges. So we're in a pre-IPO phase, and we're moving to the ICO. The ICO is going to be a very small portion of the overall offering, but in order to be able to get involved, the primary thing we're going to be doing is we're launching the exchange coming in Q4. We plan to have it open and up in November. That means it'll be up before the ICO. And in order to operate on this platform, you're going to need BlockVest tokens. So we don't really need the ICO. We don't need the crowdfund capital. We've been around in investment banking for years. If you look at our team, we're very strong. Obviously, the reason we're doing the crowdfunding is because we want to be decentralized as far as the ownership and the governance and some of the way that the voting is done. So obviously, we know that if you don't get involved now in the early stages, you will be involved later on down the road, because we're going to be providing some things in terms of utility and case use on the platform that's going to be revolutionary, from futures products to ETFs and bespoke tranche obligations and block pools that are, again, cryptographic and nature. Very similar to robo-advising, like Wealthfront Betterment, which makes it very easy and allows you to choose. So I'll give you one tagline, because I know I went long-winded for you here. Uber decentralized the taxi cab industry. Airbnb decentralized the hotel industry. Well, here at BlockVest, we plan to decentralize the financial service industry and put the power back in the hands of the people where it belongs, and pretty much cut out third-party risk.
That's great. I think that sums it up very well. And I appreciate your insight into the industry, and I'm looking forward to seeing what BlockVest is coming out with in Q4. And I'll leave a link for the viewers down below to get to the BlockVestICO.io. And let's follow up again next month when we can hear a little bit about how you guys have grown so far and see where we're at. So thank you so much, Reginald.
Excellent. Appreciate it, buddy.
All right, have a great day.
All right.